Hey, good morning, everybody. It's time for our chart of the week, and this week we're going to be focused on small cap stocks, IWM shares, which is a Russell 2000 ETF. Let's take a look at this chart as it's really showing some nice improvement here over the past couple of weeks. So, you saw this big drop here from early part of August when markets got hammered on August 5th. But you can see the prior couple of days for the Russell 2000 were not very pretty either. We saw a big, huge drop on heavy volume at the end of July and the beginning of part of August. And then August 5th, hit the pinnacle of that drop right down to the 200-day moving average and stopped right there. That was a huge move down, but a big save for the Russell 2000. And ever since then, the index has been making a nice move up of higher highs and higher lows, and now we're above the 20-day moving average here on August 20th, and looking for another close above there. So if we can get above there, we can start making some headway into resistance here at about 224 on the Russell 2000. Now the indicators haven't completely joined into the party here with the price action. I would grade the price action here at least a B. It's not quite an A yet, but it's moving into that direction because this price action has been pretty strong off of that 200-day moving average test. So we've gone up close to 10% since that move down and to current price levels. But the MACD is about ready to cross over for a buy signal. And as we notice down over here, chicken money flow is still negative, and on balance volume, which is what I printed down over here, is starting to improve, but it's still not to the levels that it was back in July, where it was printing high levels. And it just means that more volume is coming in on the up days than the down days. We do see some good improvement, though, in the relative strength index, which has been following the price of the index, the ETF, making higher highs and higher lows. But hopefully we don't stall out right over here and come back down. But if we do, I think if we do come back down, we come back down and test some of these levels here, possibly fill this gap at about 208. Market volatility has been coming down quite a bit, but we could see a little bit of market volatility here. If we come back down and test this level and come back and fill this gap down over here, which is actually at about 206 and change, come back down, fill that gap, bounce right back up again, we'll have a higher low in place, and we could be again off to the races over here. So there are several different scenarios that could happen here with the Russell 2000. We can just keep going here right now, or we can come back down and retrace from an overbought condition that we're in right now. Remember something: if markets are overbought, it's simply a signal. All right, it's just a indication. It's not a trigger for you. So it's an observation that it's time to loosen up a little bit, lighten up a little bit on some of your positions, and wait for what the next move is going to look like. So that's the Russell 2000 IWM.